YouTube, what it do? It's your boy Young Soros here back with another video, and in today's video, we're going to be talking about how you can invest in a bull market, in a bear market, the difference between them, and whether you want to be investing in a bull or a bear market. The answer may surprise you. So let's jump right into it, starting with your long-term portfolio. All right, listen, guys, when you invest and you're holding these stocks for 10 to 20 years and you're in it now and you're saying to yourself, is it going to pay out, is it going to do this, is it going to do that, you're going to get paid out in your long-term portfolio, whether that's growth stocks, technology stocks, dividend stocks, or if you're holding a mix of both. What you want to do is diversify, but to simplify, your long-term portfolio is going to carry you in the bull market. That is where you're going to see most of your interest start to compound. That's where you're going to see most of your gains come from, the long-term portfolio. So make sure you have good stops in there. Apple, Microsoft, Google, Tesla, the basic stocks. And then if you want to get a little creative, you might want to go with MPW. You might want to go with things like that. Disney, companies like that. If you want to get real technical and start researching it, what you can do is that you can have things Snapchat if you want to go more riskier, things like that. So keep that in mind. Your long-term portfolio will carry you in a bull market. And the next thing I want to talk about leading into that is options. Now, with options are great with low volatility, and in a bull market you can make a 20% gain turn into a 2000% gain with the options. And what's great about those is that you can hedge the downside that you will experience in a bull market. Yes, there will be downsides in a bull market, but you can hedge the downside for a little bit and then still make money on the upside, and both ways once you really start getting deep into it. But with options, you can take advantage of the low volatility, you can take advantage of the low premiums, you can all that sort of stuff. And with that, you will compound it with your long-term portfolio, guys. You will be rich within a year in a bull market, especially if we take a look at the bull market of 21 and 20. If you take a look, give me 1 second, guys. If you take a look at the bull market we had in 21 and 20, if we zoom out here, 1 second. If we zoom out here, look at this run we had all the way from the lows of here all the way up to here. Now, it's not going as far back as I want it to, but you guys get the picture. Even if you're going from down here, the lows of October all the way up to here, that is a huge move and a huge percent gain. And once you realize that the bull market is where you want your long-term portfolio to shine, that is where you guys will start to succeed. And then once you have your long-term portfolio, you can start leaning into the options and the futures and all that sort of stuff. But leading into the next topic, technology stocks, consumer cyclicals, things like that. You want to be investing in these growth stocks heavily. Especially the cyclicals, because depending on what economic cycle we're in, whether that's expansionary, inflationary, recessionary, you can make a lot of money. So let me get into the cyclicals. Oil, energy, things like that, they go up in an inflationary environment. So knowing what economic environment you're in, especially in a bull market, can be very, very valuable. Growth stocks, obviously they grow during economic upturns, economic booms, things like that. You had your, you know, AMC, huge company, not necessarily for the right reasons, but you had meme stocks, you had Bitcoin, you had Ethereum, cryptos, all that sort of stuff. Basically, everything can go up in a bull market, but growth stocks, especially, they will most definitely take over once you're in a bull market. Growth stocks, small cap stocks, those things will take over, especially once you start getting into technology. like you had Nvidia recently, but we're more in a downturn or a bear market, but we'll talk about it in a minute. But technology stocks, cyclical stocks, growth stocks, these will be the main stocks that will carry your portfolio going into a bull market and continuing into the bull market. And then once we start switching from a bull to a bear market, that is where the differences start coming to play. And that's where you got to start switching up your strategy. But just because we're switching from a bull market to a bear market doesn't mean you take these stocks out of your portfolio. That's where you want to be adding them. That's where you want to be doing things like that. So keep that in mind. Another thing you want to talk about is low volatility. There is zero to no volatility in a bull market. You may have a 8% dip, 5% dip, things like that. But once you have those dips, you'll have another 10% move to the upside, 50% move to the upside. So keep that in mind. And with these moves, 2018, 2019, 2020, 2021, 2022, these moves are abnormal. So to see the market move on such a huge scale is kind of unrealistic in a sense. Usually in a market that should not move this much. And that's where, the options come in and things like that, so you can get more bang for your buck. But that is besides the point. These moves that we're seeing are pretty uncommon. That is a symptom of high volatility. Yes, you can have high volatility in a bull market. It does happen. Look at the crash of 2020, extreme high volatility. So it can happen, but more often than not, there will be low volatility within these markets. Keep that in mind. One more thing, you want to be more risk on, and you can take more risk in a bull market since everything is going up. The market doesn't care whether it's a functioning company, whether its EPS is high or its debt, things like that. The market doesn't care. It's in a bull market. It's all happy and excited. Nothing matters. So, with that being said, it is going to run up everything to the moon, cryptos, all that sort of stuff, Dogecoin. So get in while you can, but just know that even though these things are going up, these aren't necessarily the best stocks to invest in. They're just the best stocks to invest in at the time. You got to play the timing with that. But if you want really, really good stocks, we're going to talk about that in a minute. But just know that these won't be there forever. They're huge. What goes up must come down. Meaning, the bigger the rise, the harder the fall. So keep that in mind. You can ride it to the upside, yes, but don't get caught up in the moment. Don't get fooled. Don't get finessed. All right, guys, just get in and get out if you can, or you may not want to get in and get out. Maybe you want to hold it long term. That's up to you, but make sure you know the risk associated with that. And just know the bigger the rise, the harder the fall. So if you see this thing go 10,000% in a day, then you may not want to trust the first move. You may want to short the downside and things like that. So keep that in mind as we go into the bear market. All right, guys, this is where people start to freak out. This is where everybody's like, the world is going to end. And this is where people think you can't make money in the bear market. No, I am here to dispel any misconceptions about a bear market. This market, a bear market, which we're currently in 2022, 2023, and then going into 2024, bear markets are where fortunes are made. Yes, you can get rich in a bull market, but bear markets are where investors and traders and things like that, this is where they live. This is where they are put into the fire and they either prevail or they either sink. So, being in a bear market is one of the best things that can happen to you in your financial career as a trader, as an investor, and things like that. Look at Warren Buffett, Michael Burry, people like that. They all made their riches and their names not in bull markets, but in bear markets. So keep that in mind when you guys are looking into the stock market. You guys are saying, oh, the stock market is bad and things like that. Look deeper into it. Ask, why is it so bad? Ask these questions because you may not think the reason we're in a bull market, not in a bull market, in a bear market we're in is because of the reasons that you're saying or seeing in the news. And that's what I want to dispel here. You can just be in a bear market because, Corrections happen in stock markets all the time. Corrections happen in life. You have your ups and your downs. So just because you're in a bear market now doesn't mean you'll be in there forever. But the bear market is one of the best places you can make your fortunes. With that being said, there is a lot of high volatility and high risk going into bear markets as things are selling off, as the market starts getting scared, as sentiment starts getting scared, and people start running away from these stocks and saying, I don't want to buy these, I'm scared, I don't want to do this, and things like that. That is your chance to jump in and get in. You don't want to buy a stock at the top, you want to buy it at its lows. And then I'll give you a prime example. Nvidia, if we take a look at the yearly chart, if we take a look at the yearly chart, I mean, the low of it was $100. You could have had $100. You put in $500 here. That's $1,500. No, that's $2,500 you could have had right there. $2,500 you could have had if you would have just put in $100 and way down here. And this is where the bonds were breaking down. This is where you had 8% inflation and things like that. And this is where people were saying the world is going to end and hyperinflation was accruing. So keep that in mind when you're investing. You want to be flexible, you want to be nimble, and you don't want to get caught up in the smoke and mirrors that the market will throw at you, aka the news and things like that. You want to stay on your feet and you don't want to get caught getting mixed up because they will catch you lacking. If you don't know what's going on, you could get fooled easily in a bear market. So keep that in mind. But if you're not into the more, I'm going to trade the bear market and high risk and things like that, what you can do is go more defensive, go healthcare, go sit. It's not cyclicals. Go more defensive stocks. Go healthcare. Cut tech. Cut value. Not value. Cut growth. Buy more value. Things like that. Walmart, McDonald's, Target, things like that. Um, defensive stocks, healthcare. Buy those stocks so that way they will protect you from any downside risk coming into it. Because even though you're in a bear market, yes, some companies actually go up during bear markets because they're able to be sustained in either market. Doesn't matter which market. People need food all the time. So you know what they're going to do? They're going to buy McDonald's, especially in a bear market or a recession where prices are more expensive or people don't have money. What are they going to do? They're going to go to the dollar menu. That's where McDonald's comes in and says, boom, I got you covered. Go buy some McDonald's. So you want to add that into your portfolio. This is not financial advice, by the way, guys. Make your own decisions. I'm just telling you what I've seen in these last couple of years and how these things work and how you can get more bang for your buck in the bear market. Buy defensive stocks and value stocks within these markets and you will make a decent amount of money. You want to cut high risk stocks such as tech. You want to cut growth, not growth, I'm sorry. No, actually, no, you are cutting growth. My bad, guys. But you want to cut growth and you want to buy more value. Now, does that mean you want to cut it out completely? No. What you want to do is you want to say, all right, you want to go into it and research, all right, is this company sustainable and things like that? And if it's not, either cut out or wait till it drops some more, keep buying it, buying it, buying it, and then ride it up as you exit the bear market. So keep that in mind and all that sort of stuff. Cut tech too, but you don't want to get too crazy with it as again, if we go back, Nvidia is a tech company and in the middle of a bear market, it just ran up all the way to all-time highs. So keep that in mind. So you don't want to just go crazy with it and just cut everything out. You want to just be nimble, have cash on hand and things like that. And if you really want to be safe with it and you seeing that, things aren't looking too good, go buy bonds. Go buy the 6-month bond. Go buy the 2-year bond, 4-year bond, 10-year bond, 30-year bond. Go buy bonds, guys. And if you really, really, really want to get into it, you can buy gold and, all those sort of things, Japanese yen, things like that. But we'll talk about that. But if you really want to protect yourself and you're saying to yourself, I don't like what's going on in the markets, and you don't think anything's going to happen, go buy bonds. Bonds will guarantee you a percentage depending on how high the interest rates are. Buying bonds in a bull market isn't necessarily the best way to go about it, as rates will be lower and things like that. Bonds, I think, in 2020 were below 1%. Why would you do that when you can go buy AMC and get like 10,000% or GameStop? You know what I'm saying? So you gotta pick which vehicle you're going to use depending on which market you're in, whether that's bonds or whether that's futures or defensives and things like that. And speaking of that, going into futures, with the futures in a bear market, since there's high volatility, options aren't going to be the play. It's gonna be harder to make money trading options. It's gonna be harder to do these things. So what you want to do is you want to trade dollar for dollar, whether that's trading the shares up front or whether you want to go futures. And with futures is that there is an extreme amount of risk with futures. I personally don't recommend trading futures with you guys until you're more comfortable with a lot of risk, a lot of downside, a lot of upside, and you're able to not get affected by the swings of it all and keep your emotions in check. But with futures, you can hedge with futures way more than options and way better than options, as options have a lot of things that go against it in a bear market, and it is hard to not only hedge your portfolio but to make money on either side. But with futures, you get the dollar for dollar move. So with the greatest investors, the greatest speculators of all time, they all use futures. They didn't trade options. Some of them did, yes, but it was mostly futures driven. With that being said, futures are nothing to play with, guys. You will you will go bankrupt quickly playing with the futures, and that is why you have to stay nimble and stay on your feet and get some experience under your belt before you start going into futures. And if you are going to go into futures, just dabble into it. Dip your toes in the water. It is more expensive, yes, but the payout is way, way more than you can ever imagine with the futures. And but there's things you need to do, like apply for margin, have a margin, and things like that. But once you do all that, guys, you will be set to trade futures. And I'll get into a video about the difference between options and futures, and how you can utilize them. You can use both interchangeably in a bull or bear market. There's ways to go about it. With options, you can have different strategies within it, like the butterflies, where you can profit off of it. But for the most part, you can use these interchangeably. So does that mean you can't make money with options in a bear market? No, not necessarily, and vice versa. Can you make money with options in a bull market, or can you make money with futures in the bull market? Yes, you can, and vice versa. But it is going to be harder trading options and making money in a bear market than in a bull market. Not necessarily with futures, because again, you're trading dollar for dollar, but volatility will make this more likely as there are higher swings. So you can, take little moves throughout the day and things like that. But with that comes with higher risk and more potential to get stopped out and to lose, or you may be down 20 grand on the futures. So keep that in mind. But you don't have to get that risky. You can trade bond futures, you can go oil futures, you can go things like that. So keep that in mind when trading these futures. You don't have to just trade the S&P and the Nasdaq. You can go oil futures, you can go wheat futures if you want to stay away, or you can go to the bond market and then things like that, play the bonds or the yen or anything else. You don't have to just play the stock market with the futures, which is an advantage that options do not have over futures. Yes, you can play the options with, different currencies and things like that, but we'll get into that. That's where it starts getting complicated. That's where you can start really getting into the weeds of that. But that is it, guys. I hope you guys enjoyed the video. Drop a like down below and comment if you want to see a tutorial on how to trade options and futures. And I will talk to you guys later. Young Soros out.